traditional cycle, and that pushes, Bitcoin up to the 100,000 to 200,000 range. And
was laughing at me on CNBC every time I would talk about Bitcoin. Where is it going? It's probably going to 100, then 150, then 200,000.
Even in 2022, which was a bear market, the number of active wallets grew 42%.
I mean, can you play the clip in 2012 and 13 when it was at 200 and everybody was laughing at me on CNBC every time I would talk about Bitcoin? Where is it going? It's probably going to 100, then 150, then 200,000. In what period? I don't know. 5 years, 10 years, but it's going there. And the reason is because every time you see all of this stuff happening, it just reminds you that, wow, our leaders are not as trustworthy and reliable as they used to be. And so just in case, we really do need to have some kind of, insurance we can keep under our pillow that gives us some access to an uncorrelated hedge. And it's going to eventually transition to something much more important. But for right now, you're just getting all these data points that prove this thing. It's just the fabric of society is frayed. And until we figure out how to make it better, it's time to just have a little schmuck insurance on the side, and everybody's running in. It's just an incredible thing. I could never have imagined it.
How far are we from real mass adoption?
There's two ways of looking at this. One is crypto.com have their own kind of very detailed analysis of the number of active wallets. They've got 516 million. Kind of adds up. If you look at Coinbase users, there's 110 million Coinbase accounts. Not all of them are active, obviously. Right now, there's about 10 million active. Binance at about 150 million. Then there's a whole bunch in India. There's a whole bunch of stuff. So it's about 500 million people, wallets, however we want to look at it, right? So that's a reasonable amount. And it's been growing at 100% a year. Even in 2022, which was a bear market, the number of active wallets grew 42%.
Wow, I didn't know that.
So it's growing incredibly fast. I've said for a long time it was the fastest adoption of any technology the world's ever seen. Faster than the internet, faster than the mobile phone, faster than the television. But obviously AI just overtook that. It got 0 to 100 million in 5 weeks. But still, the pace of adoption is ridiculously big. So even if we extrapolate out the trend, in a year's time, we're at 1 billion. Maybe the trend slows. Maybe it's 750 million by the end of 2024. You very soon get to very large numbers, 2, 3, 4 billion people. So we are still early, but we're not super early. And I would suggest that the cycle that lies ahead that we've started is probably the cycle that I refer to as the everything, everywhere, all at once cycle, where we do see adoption from every angle. Maybe it's fine to set a precedent for Ethereum, but then that sets a precedent for 50 other things.
Right.
And then they've lost control. So the best thing is, unless you've got the balls of Brad and others, unless you can get it to court and get it agreed, it's very difficult for people, and that's how they like it. The maximum uncertainty makes it just impossible for anybody to do it. So it just slows down the progress. I think actually what they're trying to do is slow it down.
Yeah.
Because if they accepted it too fast, it's like kindling, right? As we know. And we saw the same in China and India and the EU. Is they're like, okay, first we need to understand what the hell this is. Second, and this is a thing that most people won't like. Second, we need to figure out our central bank digital currency. So then we can know where the capital is going. Because if central bank digital currency is on blockchain rails, then you can see the connection as it goes onto the distributed ledger systems. China did that. They closed, converted to a CBDC essentially, and they will reopen for capital flight. They're reopen via Hong Kong because now they're in control of the money. They can see where it goes.
Right.
Blockchain's a gift for them because they can see the dollar that John spends. They can see exactly where it goes around the system. Yeah. Now, they may not use it against you. It may be amazing data that we can analyze economies with. There's many things, good things that can happen. Interesting enough, the US is dragging their heels on this as well. While the UK is moving there as fast as possible, the EU is doing a decent job. Switzerland, Hong Kong, Singapore. India's still slow because it's not rolled out its digital currency yet. And it's got closed capital accounts, so it doesn't want money to leave too fast. So they need to figure that bit out. But interesting enough, when I spoke to Swapnendu Mohanty, who is the chief fintech officer for Singapore, the Monetary Authority for Singapore, he spends all his life with the BIS and the blockchain initiatives and the CBDCs. He's like, yeah, we're all sharing notes and working together and figuring out how to do this. He said, there's one black hole, the US. They won't even talk to us. They won't even talk to the BIS. They won't talk to the UK, Switzerland, anybody about CBDCs because they don't want it, because they're scared. So then once you think of that narrative that I've laid out, then you understand why the Bitcoin ETF is something they want. Why? Because it's now in the hands of Wall Street and away from the decentralized world. So you're basically got control over the capital flight. And they know that that's going to mop up huge amounts of demand and stop people going to the distributed version of it.
Right. No, that's excellent.
And it makes sense. I get why they're doing it. And actually, for retail, in an ordinary course of events, it'll work fine. But they're not really in the crypto system. They're basically tourists because they don't have their own ownership over their assets, which is the problem that crypto was built for in the first place.
Right.
You know, Bitcoin has a very clear narrative. It's a super secure chain. It's battle tested.
Absolutely.
Everyone knows what it is. That's all you need. But what they've then said is, well, nothing else should have value, which is this kind of intellectual weird place to end up.
Right.
Because these other things are networks of which people are building entire businesses, use cases, DeFi system, NFTs, all of this stuff, stable coins. That's not happening on Bitcoin. These are different types of use cases for a blockchain. And I just don't see how that kind of weird intellectual knot they get themselves tied up in to say, well, everything else is a scam and it's all worth zero. That's just stupid. All assets are going up and down in this 4-year cycle, as is the economy, as are interest rates. It's all due to 2008 and resetting interest rates back to zero, all the major governments around the world. They then issued their debt in this 3 to 5 year sector, so let's call it 4 years on average. And this debt refinancing cycle is the cycle that drives Bitcoin, all crypto, all assets. It's also the presidential cycle. They're all the same thing right now. Right, this is this super correlated world.
Yeah.
So within it, the first part, what I call macro spring, which is what we've been in, the early part of a bull market, when inflation is starting to fall, growth is still falling, but starting to try and stabilize somewhere. Normally, that's when Bitcoin outperforms. It's like in the beginning of a bond market rally, it's treasuries that outperform. Then as people get confidence and more liquidity comes in the system, they start taking more risk and it goes further out the risk curve. And that's when the alts start performing. So we're transitioning currently from macro crypto spring to macro crypto summer. So that's what's known as alt season. It starts with the higher quality tokens first. And then at the end of it, in 2025, it's kind of everything goes up ridiculously.
I've got 3 outcomes in my head that I'm juggling with. The 60% probability is we have kind of a very traditional cycle, and that pushes, Bitcoin up to the 100,000 to 200,000 range, and all the other assets accordingly where they are on the risk curve. There's a 20% chance this early start is signifying something much bigger, which is the larger adoption and the more capital into the space, which leads to larger price rises than people expect, because people are quite scarred because the last cycle seemed shorter than most people expected. Everyone thought there was another final leg higher, and that never really happened. The kind of 100,000 Bitcoin, the laser eyes idea never got there. But maybe this time the shock is for excess returns beyond expectations. The other side that I grapple with as well is, well, maybe the whole cycle's front loaded, and in fact it's shorter but more violent in 2024.